Okay, let's get this started. Good morning, everyone, and welcome to today's Tuesday Market Outlook. My name is Prakash Vijayanath. I am an analyst here at Options Play, and today I will be walking you through how we are viewing the current market. Lots of volatility over the last few days and some pretty interesting price action yesterday, so quite a lot to get through, and let's get started. But before we do, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So our agenda for today, as usual, we'll be starting off with the major indices, seeing where they are currently trading at. And, we did see that big rebound yesterday, and I do have some doubts of whether this is a sign of capitulation or not. But again, we'll be going all over that, and we'll be going over the price action and see what the possibilities are at current levels. From there, we'll be moving on to fixed income and commodities. A lot less volatility over recent days when you compare it to equities, but the charts, the price action is still quite interesting at current levels. We have bonds and even some commodities at key levels right now, so we'll be going over that and again seeing what are the possibilities there. From there, we'll be moving on to sector rotation. What are the sectors that are outperforming? What are the sectors that are underperforming the market? And we are starting to see some slowing momentum from the leading sectors, the sectors that have provided leadership over the last few weeks. We are starting to see a bit of a change there. So another very important aspect for today's market outlook. We'll be moving on from there to a few subsectors of interest, and we'll be ending today's session with some bullish and bearish market observations. So starting off with the S&P 500, again, lots of volatility recently here with the S&P 500, not only breaking below the 453 support level, but also breaking below and reaching that 428 support level yesterday. It did recover and, priced it in the day at session highs. But the big question here for me is this a sign of capitulation or not? Is this the bottom of the decline that we have seen, and should we start to be expecting a recovery? I think it is a bit of a wait and see game, but I'm not really convinced of the V-shaped rebound straight back higher, like we have seen in the last 2 years. Almost every time there's been a bit of a sell-off or there's been a bit of a decline, there's almost been an immediate recovery, and I am not convinced of that. Firstly, the VIX opened above 30 today, and that's a chart we will be going over a little bit later, but that is, a major concern for me, especially when you look at the VIX yesterday. There was a big rejection above 30, and, you would hope for it to move lower, but the fact that it's opened above 30 already, that is not very encouraging. And secondly, European indices, there was this low bullish momentum in European indices this morning. And normally when you see the recovery, when you see a bit of a bounce, the European indices kind of give you a clue what's going to happen in the beginning of the American session, where, where there's a big bounce in European indices. That tends to translate to the US session as well. And that did not happen this morning here. So, what I would be looking for would be probably a retest of this 428 support area. Like I said, I'm not convinced of this immediate recovery. And I do think that the major indices are already set to open lower this morning. And I'll be looking here for the S&P 500 to retest the 428 level. And it may provide some support. And we may have actually seen the bottom of this decline, but at around 420, which price reached yesterday. But again, this is not enough bullish momentum here or enough clues for that to support evidence of an immediate rebound. So maybe more consolidation at current levels. Let's see what happens today, especially with the price action, and let's see if 428 can hold. Should that level break, the next level I'd be looking at would be this 420 area that we're priced and find support at yesterday, but that will be a very minor area of support in my opinion. So moving on to the NASDAQ 100, we can see here, the uptrend has broken. I should say uptrend there. I apologize for that. But it's now essentially forming to a bit of a downtrend here on the daily time frame. So, price has been on a strong uptrend. You can see this this trendline channel. And since then, that has broken through to the downside over the last few days. And if we take a look at the daily chart here, we can see exactly what's happening from a day-to-day perspective, where price broke below the 382 support level and again has broken below now this 353 support level. And yes, it has come back to retest this area late yesterday. So today is vital for the NASDAQ 100. If it can stay above 353, that will provide evidence of maybe this being a bottom and maybe respecting this 353 area of support and maybe even a continuation higher in the weeks or months to come. But if it breaks below 353, and if we see bearish price action at current levels, we may see further downside. And that, in my opinion, is a more likely outcome when you consider the fact that the whole theme in markets right now is rotation out of growth, which the NASDAQ has more exposure towards. So I do expect a bit more bearish price action today. But again, let's see what happens. Anyways, in the case of bearish price action, in the case of a continued decline, in terms of support levels that I'd be looking at, I'll probably be looking at this horizontal area of support at around 340 first. Between 340 and 330, this range would be the next area of support I'll be looking at for the NASDAQ 100 should we see a further decline. And taking a look at small caps. So we know small caps have been underperforming large caps for a while, and we have seen, we've talked about this before on many occasions, that we've seen a strong channel, which small caps just couldn't break above. Even when they did initially, there was an immediate pullback here, immediate rejection of 244, and price eventually broke below this major support level at around 210 or so. And with strong bearish momentum, you can see it's been pretty much in a free fall over the last few days. It did recover somewhat yesterday, but for me, I'm not, again, like with the large cap names or the large cap indices, I am not very much convinced of a full-on recovery. What we may see at the most would be, a strong rally back to its previous support level, a retest of this, maybe some bearish price action, which actually would confirm a further move lower. Or even, if there's not enough bullish momentum, we may see that move happen a lot earlier and price move lower here. And in terms of the next support level, it is hard to see here on the 3-day chart or even the weekly chart, but I would be looking at maybe this previous swing low here at 192, which price did find an area of support yesterday. So looking at the VIX, and the VIX is a fairly important chart right now because it essentially tells us why we are seeing so much volatility. Well, I should say it's a measurement of the volatility that we are seeing. And we can see here the fact that it's broken above this 30 level. Now, the volatility that we saw a bit earlier in December, it was quite high and it did breach 30 intraday, but it didn't really close above 30 convincingly, and it eventually moved lower. But now in more recent days, we've seen the strong move up in volatility for the VIX, and now actually opening above that 30 level, despite yesterday's close below the 30 level, which was actually somewhat encouraging to end yesterday's session. Taking a look at the weekly chart, so we have the pandemic drop, which saw this massive spike here in the VIX, and ever since then, the VIX has been on a downtrend, which has been somewhat encouraging. Here, sure, there's been a few spikes along the way, but nothing too concerning to be worried about. And even if we consider the fact that, there hasn't really been more than two weekly candles of a bullish move here for the VIX, that is, again, another form of encouragement. We most likely will see that the third candle would be a bearish one, and we may see volatility resume back to somewhat normal levels. But again, the fact that it's not really respecting the 30 level and it's opened higher, in the short term at least, that is concerning for the major indices. And I do think, again, for the next few days at least, we will see a lot more volatility. We will see a bit more of a correction here in price. So that's why overall, based on the price, even though we saw some very bullish price action yesterday, especially towards the end of the session, I am not convinced that will hold up, because you would have wanted the VIX to, especially the first thing you would have been looking at would be, is the VIX opening below 30 and is it continuing lower before the market open, and that has just not been the case. So taking a look at value versus growth. So value versus growth, this really summarizes the theme, the major theme that we are experiencing right? We are seeing a rotation out of growth and into value. And we are seeing now that this breakout level at around 0.58, this is a ratio chart, so you can't really use too much technical analysis on this, but still it does signify this breakout level here at 0.58, and it does signify the strength that value has over growth at the moment. Still plenty more upside in my opinion here for value versus growth. If you take a look at the momentum, there's a lot of momentum here with rotation towards value and out of growth. And I do expect that to continue. And that again will aid in the volatility that we are seeing. When value tends to outperform growth, we do tend to have a lot more choppiness in markets. So another thing to keep an eye on. And taking a look at yields. So yields have come into a bit more of a consolidation phase finally. We saw this very strong bounce above from 137 basis points all the way to 190 basis points. But yields are managing to stay above 170 basis points despite the pullbacks that we've seen in recent days. And I do think there's more consolidation on the cards overall. Long term, I do expect to break above 190 basis points. But in the short term, I think after this very strong rally higher, I do think now is a bit of time for consolidation to take a breather here for yields. And we are starting to see momentum relax somewhat slightly. Again, once yields rise, that tends to be a positive for the banking names, for the financial names, and it tends to be a negative for the overall market though. But, for now, yields seem to be a little bit more subdued compared to more recent days. And bonds. So bonds as well, pretty much flirting with this 141 major support level. We can see 141, 142, I should say. But we can see here that there's been, a strong bearish move all the way to 141, and price did breach below that level initially. It did recover over the last couple of days, but it's finding an area of minor resistance at 144 already, and did move lower significantly yesterday here. So we can see that, price is not really rebounding with strong momentum from this 142, 141 level. And overall, longer term momentum does seem quite negative. So we may see a bit more consolidation in this area. And should there be a further additional break of this area, of the support area, the next area that we'd be looking at would be 136 here for TLT. And gold. So gold actually managed to break above 171 resistance here, which, very, very encouraging for gold, for those that are long in gold. And also, additionally, it did pull back in recent days. It retested it and managed to stay above 171. And this does provide evidence of a continuation higher here for gold, with the next resistance level being at this, false breakout high between 175 and 174. So that will be the initial target that I'll be looking at for gold here in the short term over the next few days. But should price break below 171, should this be a false breakout? We have seen that in the past. And should price break below this resistance level or resistance to support level, I'd be looking for a decline back to around this 167 area or so as a minor area of support again, but very choppy price action in gold at the moment. And next we have crude. So, we saw this very strong move for crude from 66 all the way to around 86 or so. And we are starting to see that pullback. Maybe that pullback was needed. Price was definitely overbought to an extent, but it hasn't been a very strong reversal. I think it does seem to be a bit more of a slight pullback in price, and this doesn't provide evidence of a further retracement lower here or full-on reversal in price. What I'll be looking for is, more consolidation at this area and possibly a break above 86 to really confirm a further rally higher here for crude. But again, a bit more of a wait and see game, but it does seem to be intraday that 82 is that support level that crude is managing to hold so far. And taking a look at the sectors, last week compared to this week, last week, you could already see there's such a massive difference here in the sectors. When you compare the two sectors, we had not 2 weeks, we had 8 sectors with bullish trends last week. We now have 8 sectors with bearish trends for this week. Last week was only really communications that was lagging, or the strong laggard of the market. We had technology and discretionary as well, which we knew were in the lagging categories. But now we can see almost all these sectors are showing bearish trends with the exception of staples and energy, which has been providing leadership in recent weeks. So quite concerning overall. And if we take a look at the sector rotational chart, we have 6 sectors in the improving and leading category, 5 in the lagging and weakening category. There actually hasn't been too much change in terms of rotation itself, but in terms of momentum, we are starting to see the sectors that are providing leadership start to lose out on that and start to lose out on that momentum. Energy is starting to move lower, financials is moving lower as well, and possibly even at high risk of moving into the weakening category. But we are starting to see some, good momentum here in communications and utilities, which are back in the leading category. So, after months of weakness in communications, the fact that it's been able to rotate into the leading category is very encouraging for the sector. And we are starting to see, again, some good momentum in healthcare after rotating into the lagging category, and technology coming back to life somewhat slightly, but not very convinced just yet. I'd like to see more of that over the next couple of weeks before I would consider technology to be providing leadership or in a position to provide potential leadership in the future. So taking a look at some of the sectors, starting off with staples. And staples, a very defensive sector traditionally. And we can see here it's been able to hold up despite all the recent market volatility that we're seeing. It hasn't really even touched that 73 previous resistance level. It hasn't even retested that. And even yesterday, it did decline all the way to 74, managed to stay up though and recovered later in yesterday's session. And if we take a look at the price action there, we can see initial area of support already at 74. I would consider that quite a minor area of support, but there is resistance here at around 78, and price is essentially just in between that right now. But overall, if we look at its performance relative to the overall market, where the S&P 500, there was a massive decline, and most of the other sectors are now on bearish trends, staples is holding up quite well, and it does provide a very good defensive option for those of you that are still looking for a bit of long exposure, or at least for a bit more defense in this time of such high volatility. And next we have communications. So, if you've joined this session before, you would know throughout the last few months, I've been quite bearish on communications, but I am starting to change that tone. Yes, we have a lot of systemic risk at the moment, but communications is now starting to provide leadership. It's now starting to rotate into the leading category. And if we take a look at the chart, what are the key levels? We can see here there was a strong rally all the way to around 86 and an immediate reversal, strong bearish momentum. Price did consolidate between 82 and 79. It broke below that 79 support level. Came back to retest it. Perfect retest and rejection of that level, and a strong move lower here. But what you'll notice is something called positive divergence. So basically, it's when momentum does not confirm a new lower low. As we can see here, when price made a lower low, momentum spiked lower. But in the more recent lower low that's making, momentum has actually made a higher low. So price made a lower low, but momentum made a higher low. That's positive divergence. And that is actually quite a bullish indicator. So for me, communications has suffered quite a lot in recent months, but I do think maybe now we are starting to see signs of maybe not a full-on rebound, but definitely our performance against the overall market, which it has been lagging against the overall market since almost September now. In terms of key levels, I'd be looking at, obviously 79 area would be a very major area of resistance. But in the short term, in terms of support, I'd be looking around 71. That has provided support in the past between 71 and 70. And, if price can maintain above the 71 level, that does provide evidence of a continuation of this rally, maybe back to 77 and maybe even all the way to 79 or so for communications. Taking a look at real estate. So real estate is at a key level right now. We saw fairly bullish price action over the last few months. Price broke above this 47 level. It came back to retest on multiple occasions, and it has actually, in more recent weeks, rallied all the way to 52. Since then, ran into resistance, reversed lower with a lot of bearish momentum here. It did breach the support level at 47, recovered later yesterday. And for me, today is going to be a pretty important day for real estate if we see bearish price action. that does confirm a move lower here. And I would be looking at 44 as the next potential target here for real estate. If real estate can manage to stay above the support level, I think that provides some evidence of a move back to this 49 area in the short term. But my bias is a bit more bearish here for real estate, and I do think there's a high probability of it reaching this 44 and retesting this 44 area of support over the next few days, especially with momentum, longer term momentum turning negative, and even shorter term momentum, despite being oversold a few days ago, it hasn't really rebounded positively. So definitely a bit more of a bearish bias here for real estate, but let's see what happens today. And next we have technology. So, I mean, pretty interesting chart for me because we know technology is under a lot of pressure at the moment. We know it's a sector that is dragging, the major indices lower significantly. So if we take a look at the chart itself, key area for me immediately would be 148. We can see prices now bounced at this level on 3 occasions, if you include yesterday. And there's a big bounce yesterday, quite encouraging in terms of price action. But again, I have my views as to why I don't believe that we're going to see that immediate rebound. And that being said, the initial target here for resistance would be at 159. And from there, if we see some bearish price action, I do think that provides some evidence of a revisit back to 148. That being said, if there's a lack of momentum today, if technology opens weaker, and in general, if we see some more additional weakness this morning at the open, I do expect a revisit of this 148 level before price actually touches that resistance level. And should 148 break, the next level that I'll be looking at as a resistance level would be this 144 area or so, which price did form a resistance level in the past. Sorry about the lines there. Okay, next we have SOXX, which is a semiconductor ETF. So again, very similar to technology in many aspects. Obviously, the technology sector is made up of a lot of semiconductor names. In particular, with the price action, SOXX is now at a very key area. This 478 level did provide resistance in the past, and more in recent months, price did break above that level with very strong momentum. It formed a base between 560 and 510, and has since broken below that area. Strong bearish momentum. And yesterday's price action did see price recover back to retest this 478 area. But again, today is going to be a very important day, I think, in terms of price action. Can price stay above this area, or will it break below? Should it break below? Should it fail to break above and there'll be bearish price action at this current area, I'd be looking at the next area of support, which would be between 440 and 430, around here, where price did find support in the past on multiple occasions. And we may see a more consolidated or more choppy price action here for the SOXX semiconductor ETF. So looking at some bullish market observations, starting off with ANTM, which is part of the healthcare industry. And healthcare has been, it's a great sector for defense at times of a lot of volatility. And I think this is an interesting chart for me because there's a couple of ways you can read it. First, in terms of the price action, this is quite encouraging, right? We see price is still on a bullish trend. It hasn't broken structure. It's maintaining above this 440, 435 support level. It's not really breaking below 440 or staying below 440, despite all the volatility that we have seen in recent days. So great defensive name already. You can see the fact that it's outperforming the market by far, and it is still maintaining a bullish structure. But if we take a look at the momentum chart, we can see a bit of negative divergence where the new higher high in price was not confirmed by momentum, where there was a very obvious negative divergence here. So we saw a higher high confirmed by momentum, and price broke above that to form a new higher high. Momentum did not confirm that. That's negative divergence. And for me, that is normally a very strong bearish indicator. That being said, if I had to prioritize between the price action itself or with the fact that ANTM can stay above 440 or the negative divergence, I would prioritize the price action simply because of the current macro outlook that we are seeing, where we are seeing defensive sectors perform better. And I do think for me that yes, there's negative divergence, and that is something I will keep an eye on. But the fact that price can maintain above 440, that is very encouraging. And I do think ANTM is a great defensive name here amidst all this volatility. So Schwab is part of the financials sector, and we can see here, a break above this major 76 area of resistance. Price did come back to retest it and moved higher with strong momentum all the way to this 95 area or so. Since then, there's been a strong reversal. I mean, there hasn't been, I wouldn't say that's a strong reversal, but I think that's a pretty healthy retracement after approaching overbought conditions above 200 on the longer term CCI. And almost perfectly, it has come back to retest this 85 area of previous resistance turned support. It did find support there before, and yesterday it did provide some evidence of finding support near that area. The fact is, financials are still in the leading category. Yes, they have lost some momentum more recently, but it does look like as well yields are starting to pick up, or at least not decline further. I think that there is some evidence here for a push higher for Schwab, maybe to revisit back to that 95 area, and should break, we're looking at new all-time highs. So Marathon Petroleum, part of the energy industry, which energy sector, which is, the strongest sector in the market at the moment. We can see here strong bullish trend, pull back from 260, which was a previous resistance level, and strong move higher all the way to 76. Price is now pulling back to its previous swing high at 68. It bounced off at 68 area of support. And for me, this provides some evidence of a continuation higher, and it does provide a better risk to reward bullish entry here for Marathon Petroleum. Again, part of the energy sector. So, this is the type of sector that you want to have exposure in if you are bullish, because it is providing leadership and it is the strongest sector in the overall market so far. And taking a look at our bearish observation that we have for you today, Adobe, part of the technology sector, which we are still quite bearish on. And if we take a look at the structure itself, you can almost see this topping formation, not a perfect double top, but something that somewhat resembles a double top. Price did from rallying all the way to 700. There was a strong bearish move back to this 560 level, an initial bounce higher, but no momentum, and we saw price break below 560 all the way now trading near 500. Price action is fairly choppy at the moment, but the fact that there isn't a strong rebound, the fact that there's a name in a technology sector, and the fact that momentum is still very much negative, I do think there's more room for downside here for Adobe. And I'll be taking a look at the 3-day chart here, where we can see price did find support near this 460 level in the past. And I do think, based on momentum, based on the very bearish price action that we are seeing, I do think there's evidence of a continuation downside back to this 460 level for Adobe. So with that, that is all I have for you today. Thank you so much for joining me. I hope you have a great trading day ahead. Goodbye.